All right, ready to dive in. Today, we're taking a close look at KEI Industries Limited.
Yeah, they're a big player in the cables and wires business.
We've got a lot to unpack here.
We do. We've got their official letters to the stock exchange, financial reports, even their updated code of practices.
Definitely gives us a lot more than just the numbers, right?
Exactly. We can see their strategy, how transparent they are, all really useful stuff for anyone interested in KEI.
Let's jump right in. What's the big headline grabbing your attention?
Well, first thing that jumps out is they just declared an interim dividend.
Oh, interesting. How much?
It's ORIS 4.0 BO per share for the fiscal year 2024-25.
Hold on, ORS 4.00.
Yeah.
Isn't that like a 200% dividend payout? What does that even mean?
Basically, they're sharing their success with their shareholders.
Makes sense.
It's a bonus payment before the year ends.
That's a pretty big deal.
Definitely worth noting.
Got it. So everyone, mark January 27th, 2025 on your calendars. That's the record date.
Right.
But let's move beyond the dividend. How's their overall financial performance?
Looking pretty solid. For the quarter ending December 31st, 2024, their total income was $24,808.68 million.
Okay.
Net profit came in at $1,648.05 million.
So those are big numbers, but how do they compare? Like, are these good results?
Definitely. They're up from the last quarter.
Good.
And if we look at the same quarter last year, their revenue from operations is way up.
Sounds like they're doing pretty well.
Yeah, they're on an upward trend, for sure.
No, we know KEI isn't just one big thing. They've got different parts of their business, right?
You're right. There are three main segments: cables and wires, stainless steel wire, and EPC projects.
So let's break it down, starting with the obvious one, cables and wires.
Well, that's their biggest revenue source, no surprise there.
Makes sense.
Brought in $23,517.47 million this past quarter,
Okay.
up from the previous quarter, so that's good. Shows there's still demand for their core products.
All right, and what about stainless steel wire? How are they doing there?
It's a smaller segment, for sure.
Yeah.
But it's holding its own. Brought in $550.70 in revenue this quarter.
Okay, not bad. Now, this EPC projects thing,
Yeah.
I'm not really sure what that is. Can you explain?
Sure. EPC stands for engineering, procurement, and construction.
Oh.
So it means they're involved in these huge projects, designing, building, delivering whole facilities, not just making the cables and wires.
So they're kind of putting their own products to use.
Exactly. It's an interesting part of their business.
It is. How are they doing in that segment?
Well, this is where things get interesting.
Oh,
The EPC segment had the biggest jump in revenue, hit $758.95 million this quarter.
wow.
Big increase from last time.
Impressive, but I'm guessing higher revenue doesn't always mean higher profit.
You got it. You're sharp.
So what's the catch?
Well, the EPC projects also have higher expenses, particularly for subcontractors.
Just higher risk.
It's definitely more volatile, could have lower profit margins for now.
Something to keep an eye on. All right, let's step back from the financials for a minute and talk about people.
Yeah, the people are just as important.
Absolutely. There was some news about Mr. Rajiv Gupta, the CFO, being reappointed, right?
Yep, he's staying on for another 5 years.
Okay.
Starting June 1st, 2025.
So they must be happy with his work.
He's got 32 years of experience in corporate finance, very important for the company.
He's been there a while.
He has.
But wait, I read that this reappointment needs shareholder approval.
Oh, you're right. That's actually a good thing, though.
How so?
Shows KEI is committed to good corporate governance, make sure the shareholders have a say.
Like it. Transparency and all that.
Exactly.
So we've got a solid CFO, a big dividend, strong financials. Seems like KEI's in a good place.
They are, but they're also looking to expand, remember?
Right. How are they funding that?
Well, back in November 2024, they issued over 5.2 million new shares.
To who?
Institutional investor.
Oh, the big guys, like pension funds.
Exactly. This brought in a ton of capital, like 20,000 million.
Wow, they're serious about this expansion.
Shows they believe in their future, for sure.
And with Mr. Gupta staying on, it seems like they're building the right team.
For sure. Getting everything ready for that long-term vision.
Now, there's one more document you mentioned, their code of practices. What's that about?
It's basically their rules for how they communicate important info to the public.
Okay.
They recently updated it, made it even stricter about sharing info quickly and fairly.
Why is that so important?
Transparency builds trust, right? Especially for a public company.
Yeah, especially after raising all that capital.
It's about showing they're doing things the right way, keeping investors confident.
Makes sense. It seems like KEI is very deliberate, very strategic.
AR.
Not just about making money, but doing it ethically.
You got it. That commitment to transparency is a big part of their story.
I think all the pieces fit together now.
It's a fascinating company.
It is. We've covered a lot in this first part of our KEI deep dive.
We have
We looked at their dividend, their financials, and how they make decisions.
big picture stuff.
Plus, that commitment to transparency really tells you something about them.
Definitely.
But we're not done yet. There's still so much more to discover about KEI.
Stay tuned for the next part of our deep dive. We'll be uncovering even more about this fascinating company.
Absolutely. We've only just scratched the surface.
Yeah,
Back again for more on KEI Industries Limited.
we are.
Last time, we uncovered some pretty good stuff about their financials, their plans,
Yeah, they seem to be in a strong position.
but we got to look deeper, right?
Always.
Every investment has risks, rewards.
Absolutely. And we need to understand the bigger picture.
So let's talk about their growth plan.
Okay.
They're really pushing that EPC segment, but how risky is that?
It's true. Growth can be tricky,
Yeah.
especially with new markets or those big, complex projects.
Like we saw, EPC has high revenue, but also high expenses.
Yeah, and potentially lower profits in the short term.
So it's a balancing act.
Exactly. But KEI has a good CFO.
Right. Lots of experience.
He knows how to manage money, get funding.
So they're in good hands there.
Seems like it.
But what about stuff they can't control? External factors.
Ah, good point. One thing to consider is how much they rely on India.
Oh, right. They're mostly in India, aren't they?
Most of their revenue comes from there.
So if India's economy struggles,
It would hit KEI pretty hard.
makes sense.
Yeah.
Maybe they need to diversify more.
That could help them for sure.
Okay, so the economy is one thing. What else?
Raw material prices, always a challenge.
Yeah. Cables and wires need copper, aluminum, right?
Those prices can jump around like crazy.
Imagine if copper suddenly gets super expensive.
Even if KEI sells a lot, their profit takes a hit.
Ouch. Managing that supply chain must be tricky.
It is. They have to hedge against those price swings.
Lots to juggle. But beyond the money stuff,
Yeah,
what about technology? Things are changing so fast.
you're right. That's key in any industry.
Are they innovating enough? Staying competitive?
Good question. We know they're working with Brugg on high voltage cables.
Right, but is that enough?
It's hard to say from these documents. We don't see much about their R&D.
So it's a bit of a blind spot for us.
It is. We need more info to know if they're leading or catching up.
And in tech, you got to be ahead of the curve.
Absolutely. Innovation is often the key to winning in the long run.
So that's something to watch for with KEI.
Definitely. Another thing to consider is the competition.
Right. Every business has rivals.
Exactly. Unfortunately, these documents don't tell us much about KEI's competitor.
Nothing about who they're up against.
Not really. We don't know their market share either.
More digging to do, huh?
It's essential, really. To
Well-
see the full picture, you need to understand that competitive landscape.
See how KEI stacks up.
Exactly.
It all comes back to context.
It does.
But before we move on, I want to go back to something we touched on earlier.
Okay.
Transparency. We saw it in their
Mhm.
financials, but is there more to it?
Oh, absolutely. Transparency is about more than just numbers.
It's how they communicate, how they treat everyone involved.
Stakeholders, employees, everyone.
So we know they're good with financial reporting.
Yep.
But what about other areas?
That's where you got to look beyond these documents.
I see.
Sustainability reports, news articles, those kinds of things.
Looking for that transparency in how they treat the environment, social issues.
Exactly. How they engage with their employees, the communities they work in.
If that info's hard to find, maybe it's worth asking them directly.
Good idea. Don't be shy to reach out. Encourage them to share more.
It's all part of being an informed investor.
It is. And remember, transparency is a journey, not a destination.
What do you mean?
Even the most transparent companies can still improve.
Always room to grow.
Exactly. It's not about finding the perfect company.
More about finding one that's trying to do better.
Right. Always striving to be more open and accountable.
That's a good sign for any investor. But we've seen there's always more to learn about KEI.
So much more to explore. Stay tuned for the final part of our deep dive.
Okay, so we're back for the final part of our KEI deep dive.
We are.
As we're wrapping up, there's this one thing. We talked about all the numbers, the plans, the risks.
Right.
But what about the human side of it all?
You mean their impact on people?
Yeah, like their employees, the communities they work in, the environment, all that.
You're right. Those things are important too.
It feels like we don't have the full picture.
Well, the documents were really focused on the financial side.
Yeah, I noticed it.
Not a lot of detail on their social and environmental stuff.
And for a lot of investors today,
Yeah,
those things matter a lot.
absolutely.
It's not just about profits anymore.
It's about values, making a positive impact.
So KEI, they're good on transparency with their money stuff.
Definitely.
But what about sustainability? social responsibility
That's where you got to do some more digging.
beyond these documents.
Yeah, look for sustainability reports, news articles, that kind of thing.
See how KEI is really doing in those areas.
Exactly. Get that broader perspective.
And if it's hard to find that info,
Yep.
maybe we should reach out to KEI directly.
Good idea. Ask those questions.
Encourage them to be even more open.
Because at the end of the day, investing is about more than just making money.
It's about supporting companies that do the right thing.
Companies that match your values.
That's what it all comes down to, really.
It does. And with that, I think we've reached the end of our KEI deep dive.
Wow, we covered a lot.
We did. From dividends to financials to their plans for the future.
It's been fascinating.
But remember, this is just the start of your research.
Right. There's always more to explore.
Keep digging, keep learning.
Find those companies that are making a difference.
Not just in their profits, but in the world.
Couldn't have said it better myself. That's all for this deep dive.
Until next time.
Keep learning, everyone.